Good morning, everyone, and welcome to Junior Achievements JA Personal Finance Workshop. This morning, we have Melissa Maki from Middlefield Bank. Melissa is VP of Marketing and Communications with the bank. And today she is going to present on savings. Welcome, Melissa.
Hi, good morning. Yes, like Michelle said, my name is Melissa Maki. I wanted to touch upon Junior Achievement really quickly. That Junior Achievement, we also refer to it as JA, is a nonprofit that's dedicated to entrepreneurship, workplace readiness, and financial literacy. Before we get started, I have a quick story to tell you. When I was in 5th grade, I had Junior Achievement come in and teach a lesson about a pen. While that might not seem overly groundbreaking to learn about a pen, I learned a lesson about marketing. So before that, I didn't really know what marketing was, but because of that, I went into a career in marketing. Now I'm going to share my screen. So personal finance. If you've joined other sessions, you've probably already learned this definition, but just as a quick recap, I'm going to explain what that is. Personal finance are dependent upon earning and savings and will be based on how the students get what they want and need. So other related topics that we're going to cover are things like earning money, budgeting money, saving money for larger purchases and emergencies, managing credit and debit, protecting finances, smart shopping, managing risk, and investing to grow money. Normally we watch a video, but I'm just going to give you a quick recap. So the video is 3 things you need to know about emergency funds. Those things range from how much money you should save, where you should put your money, and how you should spend it. So where you should put your money, a really good example would be opening a savings account at a bank or credit union. That way that your money is safe, you're not as tempted to spend it, and also your money is insured. So spending wants and needs. Think about a large purchase that you've made with your own money. Maybe you saved for jeans, shoes, a game console, electronics, or some of you, depending on age, even a car. And let's think about personal finance the same way for a minute that we think about physical fitness. So physical fitness and financial fitness seem like they don't go together. So here's an example. If you walk into a weight room right now, how many of you think you can bench 200 pounds? Some of you maybe, but most likely you've had training to do so. So if you wanted to bench 200 pounds and you added on 10 pounds each week, you'd probably get there a lot easier than just going in and trying to bench 200 pounds. So let's think about the example on the financial side. So if you wanted to save $200 in order to buy the new shoes that you wanted, and you got $10 a week from your parents or grandparents for doing chores, mowing the grass, anything like that that you normally can get some money from, it would take you 20 weeks or 5 months to save that money. Why is that important? Saving money is very important because it helps you save for unexpected expenses and also lets you buy larger items that are worth it. So if instead of saving that $200, you decided that you wanted to go out to eat 3 times a week, sure, you could get some food. You'd probably be happy in the short term, but then when it came time to buy those shoes or buy anything else that you wanted, you wouldn't have the funds to do so. Saving money can always be a challenge. So people want to spend money on things like we already talked about, clothing, entertainment, and technology, but people also need healthcare, food, and a place to live. Another rule of thumb is that wants are unlimited, but income is limited. So an example of that is I might want a brand new Lincoln Navigator. However, that comes with a $100,000 price tag. And for many of us, that would mean we'd have to live in our car. That would be less than ideal, but of course, I still really want that Lincoln Navigator. The formal definition of savings is setting aside a portion of current income for future needs. So like I said, with savings, everyone almost knows that they should do it, set aside money each month, but many find it's very difficult to do. We call that easier said than done. I can tell you that I think you should save $10 a week, but your friends are calling to go to the movies, your stomach is growling, you want something to eat. There's a lot of ways that we can easily spend our money without even thinking about it. So consequences of borrowing money, right? Saving money is difficult, like we said, but it's also necessary. It's necessary to cover things, big ticket items that you might want, and also things like medical expenses or emergencies or things that you might not be prepared to spend money for. The next term that we're going to cover is interest. The definition of interest is payment for money, the use of money, a fee paid to use someone else's money, or money earned from allowing someone else to use your money. That was a lot of money in that statement. So let's think about that for a second. If I put my money in a savings account at a bank or credit union, my money earns interest, meaning the bank pays me to keep my money there. Now, if I need to borrow money, maybe my Lincoln Navigator car loan, I'm going to have to pay the bank money to buy that purchase. So the difference between the two is to think about whether you want to pay interest or whether you want to earn interest. Both saving strategies allow you to buy things, but one is a little bit smart. It doesn't mean that you never are going to borrow money, because buying big purchase items take a long time to buy. So how do we save money? The next definition we're going to cover is called pay yourself first. Setting aside money for savings prior to paying monthly expenses. So think about that for a minute. Pay yourself first. To pay yourself first, you would be setting aside money that you plan on big purchases or emergency. So that's taking that $10 a week that you may have and setting that aside. You may have additional expenses that come up, but remember, unlimited, wants are unlimited, but income is limited. For many people, that means there'll never be enough money left over once bills are paid, because you buy more of things that you want until your paycheck is gone. That terminology is sometimes always called living paycheck to paycheck, meaning you don't have enough money left over at the end of the month to really start a savings account. It's important to think about saving 10 to 15% of your income as a goal. So let's think about that, something that's a little closer to home for you guys. So if I wanted a summer job and I worked at the local Dairy Queen and I made $10 an hour and I worked full-time 40 hours a week, over the summer, let's say that's 10 weeks. That's $4,000. And then we'd have to pay taxes on that, which they'll call your take home. How much money you actually get after taxes is $2,800. Using the model of 10% on the low end, you'd be saving $280 out of that. Now, most likely, mom, dad, grandma, grandpa, you have someplace to live. So your expenses might be a cell phone bill, maybe car insurance, maybe just your subscription to your game console, Netflix, or something like that. So ideally, if you were having a summer job as a teenager, you'd want to save about half of that money. So $2,800, half of that is $1,400. What that would allow you to do is to have some spending money throughout the year. Of course, you shouldn't spend all of that money at one time, but it would give you the opportunity. So let's talk about the non-fun things. Everyone likes to buy things, but let's talk about emergency spending. So taking a look at these images, there's a car accident, so there's minor car repairs. Looks like there's a broken foot or ankle, so someone got hurt. Might be a parking ticket. You dropped your phone, so you have a cracked screen. Your poor pet got sick. You lost your wallet, or even someone stole your bike. So to think about those things and how you have money in bank to save for that. If you'd already have money for your emergency expenses, then you're good. You know that you can take your dog to the vets and you have some money to pay for that. Normally we would do an exercise called maxed out. I'm going to try to do my best to walk you through that. Normally it would be a little more interactive. So thinking about the Dairy Queen example, The example, the student's name is Max, and Max has a problem. Max just graduated high school and is now living on his own. Each month, he's spending more in expenses to cover bills than he's earning an income from his job. Max has a special item he's saving for. Max's income is $12 an hour for 40 hours a week, which is 160 hours a month. His gross income, meaning before taxes, is $1,920 per month. After taxes and other required deductions, which is about 31% of that, his take home, meaning after taxes, he actually gets $1,325. In order to cover that and make a savings plan, he'd have to keep track of his spending. He'd also have to plan for emergencies. And like I said, right now, Max isn't saving any money. So this is the example of how you'd walk through that instruction. You would normally get a savings card, and basically the interactive activity would be, I have $200 that I've saved. Someone stole my bike costs $200. Now that money cancels out and I have zero in my savings. Or let's say I have $50 extra a month that I saved, and then I want to do something fun, go out to eat and go to the movies. I would have the money to do so. Both of those things, one you can plan for, more so the emergencies, but also have a little extra money for spending, such as doing something that you want. As we said, emergencies happen. No one wants to have their bike stolen. No one wants to get in a fender bender on the way to school, but these are all things that we have to consider. When you put money into savings, then you have lower expenses. If you didn't save enough at the beginning, then you have higher expenses. While some things are constant, we're always going to have to pay taxes. If we have a cell phone, we're going to have to pay for that cell phone or cell phone insurance. All of those things are things that we'd have to cover, but we'd also have to plan for things like we talked about before, having an injury, cracking your phone screen. All of those things could take your hard-earned money in your savings account and start to drain it. So what do we do if you have no savings? We already talked about a little bit about borrowing money. So saving for no savings, sorry. So we're thinking about what's the possibility for saving for an emergency if you don't have money and you have an emergency. You can borrow money from friends and family, use money that should go to another bill, or take out an emergency loan. So imagine if your friend asked you to borrow $100. They didn't pay you back, and they came back and asked you for another $100. What would you do? Most likely you'd have to say no, because now the person who didn't save their own money is asking you to borrow money and causing you not to be able to cover one of your expenses or to cover even something fun that you want to do. So these are the consequences that might face. If you're older and you took out a loan, you can continue to go in debt, meaning I bought my Lincoln Navigator for $100,000. Then I decided that I needed a new phone and I needed an iPad and I needed this and that. And all of a sudden now my expenses have gone to $150,000. And unless I'm making that kind of money, I'm really in debt and it's going to take me a long time to pay that off. So then we're going to go to select a savings plan. Again, normally you would have a game to compare the two. We're going to try our best to do this virtually. So if we wanted 2 tickets to prom, and that cost us $200, and we need to save that in 3 months, we have 2 options. We have a savings plan, or plan A, excuse me, is savings $200, save $20 every week until you reach your goal. Plan B is saving 40% of your leftover spending money at the end of the month until you reach your goal. So both of these plans are possible. Plan B could set you up for failure because you're expecting that you have the self-discipline, you're not going to have unexpected bills, to save 40% of your leftover money at the end of each month. So plan A is best. Automatically setting aside that $20 per week will allow you to reach your goal in 10 weeks. If you rely on savings, leftover spending money, the amount you save will be unpredictable. Now think about a PlayStation or game console that you're wanting to buy. That's saving $400 as soon as possible. Plan A is try to spend less of $30 per week you earn from babysitting and save whatever you don't spend. Plan B is save 50% of $30 per week you earn babysitting and supplement that money you save from packing your school lunch instead of buying. So plan A would not be the best option. And so let's learn why plan B is better. Paying yourself first is spending less can help you save money even faster. So let's think about all the things that we've covered. Savings can help you buy and pay for big purchases and emergencies. Emergency savings plan can help you avoid debt and pay interest instead of earning it. Sacrificing the short term offers more options for the future. Pay yourself first to ensure you set aside. Let's go back and cover a few examples of this before we move to the question and answer session. So saving money for big purchases. Like we said, if I want to buy a TV, it will take me maybe 20 weeks to save for that. I also have to be prepared to cover emergencies during that time. Maybe the TV that I had all of a sudden stopped working, and now it's not quite an emergency, but it's something that moves up kind of in the priority list because now I don't have an opportunity to watch TV. An emergency savings plan, again, if you take money from babysitting, unloading the dishwasher, whatever it is, opportunity that you have to gain money, putting it in a bank account will allow you, 1, to earn interest, 2, it would keep you from spending that money, and 3, it's also a good habit to build. So whenever you can, if you have a job, there's opportunities to do what they call direct deposit, or you can do an automatic deduction, meaning if I got paid $200 a week, I can say I want $10 to go in my savings plan. A lot of banks and credit unions will allow you to do that. You could also transfer it in mobile or online banking. So there's a lot of opportunities to set yourself up for a savings plan. And you always could use that money if you need to, but having a plan makes it much easier to do. Like I said, easier said than done is a lot of strategy that even adults face. It's so easy for me to sit here and tell you, I think you should save 10 to 15% of money you make, but that's not always realistic. It's something that we have to build to. Sacrificing in the short term often offers more options for the future. Again, an example of that is kind of, if I was saving money and now all of a sudden everyone's going to the Cheesecake Factory, which is a nice restaurant with a lot of options, but also I could spend a good amount of money really quick. And all of a sudden my savings of $50 towards my game console is gone. So then you're starting over. So that means I have to pass on going to the Cheesecake Factory in order to have the opportunity for the future to buy that game console. Those are things that we kind of learn over time. And sometimes it's really important to go out and have that social interaction, something that you want to do, but that also means you're not getting that game console. You're not getting it nearly as fast. So those are opportunities to have a savings plan so that you did set aside maybe an extra set. So instead of $20 a week you need to save in there, you're saving $30. So that $10 extra that you're saving, you have the opportunity to spend it more on something once. And pay yourself first. Again, if we wait to the very end of the month and after we've got to do all the fun activities or paid for any bills that we have, we're not going to have a lot of money set aside. There's some videos that will also be in this session that talk about people who earn higher income have more money to save. That kind of makes sense, right? If I said I made $100,000, it would be much easier for me to save $10 a week than it would be for you. And what problems also may happen is athletes and other professional people sometimes make so much money that they start buying all of these things, and all of a sudden These people who make tons of money end up being bankrupt. But let's talk about the average American for a minute. So 62% of Americans have less than $1,000 in savings. Again, think about what things cost. If I need to take my dog to the vet, that could easily cost $1,000. If I bump into a car leaving the mall, that could easily cost me $1,000. If I want to buy a new iPhone, that could easily cost me more than $1,000. So while saving $1,000 seems like a big benefit, you also would have the opportunity to spend that money on emergencies, either the wants and the needs. Basically, your savings would be very much drained by one incident. Again, that amount of money depends on your age, your income, your bills, and there's a lot of different varieties to think about that. So these were the videos that, again, we normally would play, but I just gave you a little bit of a recap on. So here's an example of what cutting back could look like. So here's how Americans spend our money. 58% of our money goes to eating out, 41% could go on things like Starbucks, and 39% on cell phone bills. So a lot of our money are going through things that could really go by fast. I think in the earlier session, if you were able to join, you also had the opportunity to learn about budget. So along with the savings plan, you also have to know where your money is going. So a budget is really important to making sure that you're set up for success. This was also the stat that I told you about. Half of Americans, really it said 62%, have less than $1,000 savings. We just talked about how quickly you could spend your $1,000. That money could be gone, whether it's emergency, want, or need, and then you're back at saving that money again. And it's kind of a cycle, right? It makes sense. We have something that we need or something that happens that we have to spend our money, and we have to think about our savings goal. So over time, you learn how to save a little bit more each time, knowing that you'll be able to go to the Cheesecake Factory, knowing that you'll be able to save enough money for a game console and some of those things. So I encourage you to make sure that you're always thinking about saving money. That could be change in a jar, that could be a Roundup app or some other way of setting aside money, automatic transfers at the end of the month from a checking account or savings account, or any kind of opportunities. With that, I'll leave you again. Think about your savings plan, think about opportunities for you to save money, think about where your money's going. Thank you for joining the Junior Achievement program today. Michelle's going to get in and help me with some questions and answers.
Great advice, Melissa. Thank you so much. Savings is so important, and the best advice is start young. That they have it. Well, we do have some Q&A questions already, and I will read those to you. For any students that are on, or educators or participants, please respond below on the Q&A, and we will share this with Melissa. Okay, the question I have, Melissa, is I will be 16 soon and would like to buy a car. Can I get a loan from your bank to purchase?
That would be something that you would need something called a cosigner. So that would be a family member that basically takes on the risk of the loan. So it is a possibility for you to get a car loan, but you'd also need a cosigner, mom or dad or grandma and grandpa or a relative or someone that's willing to take on that. Basically, that means if for some reason you didn't pay for your car loan, that family member, that cosigner, would have to pay for that. So it is an opportunity for you to do that, but we'd have to think about all of the logistics of who would sign for you. But that's a great idea, and always saving money for the down payment or money to put down is always a good idea.
Okay. Yes, at that young age, they will need a cosigner for the loan. Oh, what do you do at the bank?
Sure. So I am the Vice President of Marketing Communications. That's basically just a fancy way of saying that I run the marketing departments. So things like this background are things that I make, television commercials, product brochures, we run the social media, the website, and basically anything communications, marketing, and public relations. And again, I got my start all from a JA volunteer teaching me how to build and market a pen.
Very good. Does your bank offer interest rates?
Yes, all banks and credit unions offer interest on your savings accounts, money markets, and CDs. Those are all slightly different savings products that do different things. Savings, you can take your money in and out. A CD is called a certificate of deposit. Basically, I say I'm going to put my $5,000 in the bank and I'm going to keep it in there for 2 years. They pay you more interest, but I can't take that money out without a penalty. And also something with the state of the economy right now is people aren't earning a lot of money. Because the economy is run by the Federal Reserve, they meet quarterly and they talk about what the interest rate should be. And right now it's considered zero. So while 2 years ago, you might be earning 0.50%, you're earning more like 0.05%. So it might not seem like a lot, it might be discouraging, but over time that economy is going to come back and you're going to earn more and more interest. Plus it's money you're not spending.
Okay. Well, and these are the next questions that go with that, if you want to emphasize again. So the two questions are, how much money do I need to open up a savings account? But the other question is, can I withdraw my money from the savings account, or are there any penalties if I do?
So each institution, meaning each bank or credit union, has a different amount. Most of them, it's about $50 to $100. So you can open the account, $50 to $100, and a savings account does not have any penalties for taking your money. So you can take your money out in the ATM, you can transfer your money, you can walk in the bank and get your money out. Savings account is relatively safe, meaning it's easy to access that money. When you get into something like a money market, it's just kind of a fancier name for savings. It used to be tied more to the market. That's why it got that name. You can earn more money on that, maybe tiered accounts. And then a certificate of deposit is something that you would have penalties and fees and different types of money that you'd have to pay in order to get that money back. So I think of those as stair steps. You would start with savings, you can go into money market and the certificate. So short term versus long term.
Okay, very good advice. Also being young and having a savings in a checking account, again, if I'm withdrawing money from my savings account quite often, then I would probably recommend, wouldn't you, a checking account?
Definitely. A checking account, they call it a transaction account, meaning money is coming and going. If you did use your savings account, you actually would have some limits as far as how many transactions you're allowed to do. Usually it's 6, because basically if you're using it all of the time to pay your bills, you should be in a checking account. And you can easily have both. You can have a checking account where at the end of the month or every so often you take $5, $10, $15 and move it to your savings account. So they're all kind of building accounts upon each other.
Good advice. So you mentioned that there are limits on the savings account on transaction. Is that like per month or per year?
It's per month. So basically a bank and credit union are highly regulated. The reason that they do that is because different accounts, you earn interest in the savings account, right? So 6 transactions per month is what you're allowed to transact after a savings account. It won't let you go over, so it's not like a fee scenario, but it is something if you're having that type of transactions activity, you're touching it, you're using it all the time, then a checking account is probably a better option. And there are checking accounts that pay you interest and rewards and different opportunities there. So, and there's also team accounts. So sometimes you can get free things or less money or different opportunities there. So make sure that you're looking at all the accounts and kind of what the age requirements are and restrictions.
Some more good advice. Well, we have time for one more question. And I know you touched on this, and I might be a little bit difficult to answer, but you talked about emergency savings and how much should one, put away for emergencies?
The savings goal, they said for young people, is 10 to 15% of the money you have. I think that really depends on your income. I mean, if you're able to work a part-time job versus if you're getting money for cutting the grass, maybe in the summer, you have more opportunity to save that. And also thinking about what you would do without it. If you get of the age, would there be an opportunity for you to get a credit card just to keep around for emergencies? So there's a lot of options to think through that. And it depends on how much your bills are. So my emergency expense of replacing my refrigerator might cost more than replacing your cracked screen on your phone.
Yeah. good advice. And I like that, recommendation about 10% of what you're currently, making based on your income that is coming in. Well, I appreciate your time today, but it is 9:30 and great information on these savings and overall. And this information will also be accessible for educators. And if you want more information on Middlefield Bank or Melissa's contact information, please let us know at the Junior Achievement Office. And thank you, Melissa.
Sounds good. I had a great time. Thank you, everyone.